Hello and welcome. You're watching News Now with me, Anjali Palor. Let's take a quick look at the market's performance today. Markets slipped below the 24,500 mark, and this comes after the markets hit an intraday high. Broader indices, both mid-cap and small-cap, ended the day in green. Speaking of sectoral indices, pharma was the top sectoral gainer and realty was the top sectoral loser today. Other indices, auto, IT, energy, all ended in the green, whereas FMCG and PSU Bank ended the day in the red today. My colleague Snehi Shah is here with a roundup of today's trading session. Over to you, Snehi.
Well, yes, after a close in the green that we saw in the previous session, the Nifty closed in the red, and 24,487 to be precise is where we shut shop. So just shy and off that 24,500 mark, a cut of 0.4% on the Nifty. Similar moves on the Sensex, and Bank Nifty in fact took a deeper beating, about 0.8%. The broader end of the market too has nominally ended in the red, with names like Tech Mahindra, Maruti Suzuki, Hero Motor, M&M, Cipla, Sun Pharma, NTPC, all of them gaining 1% and keeping the Nifty afloat to whatever little extent. But the pressure on the index was caused by names like Bajaj Finance, lower by almost 3%, Trent, Eternal, HUL, HDFC Bank, Nestle, Tata Consumer, as well as Bajaj Auto. So mixed moves coming in across the street, because what started as a very strong session or a positive session did not end in the same shade. It was names like Nifty Pharma, Media, Auto, IT, Metal, Energy that managed to close in the green. On the flip side, cuts coming in from financial services, banks, realty, FMCG and PSU banks. Certain stocks in focus were Alchem, Biocon, Granules, Labs that did well from the pharma space. Maruti Suzuki, Hero Motor, M&M, all of them did well from the auto space. On the flip side, from banks, you had big cuts coming in from HDFC Bank, AU Small Finance Bank, and as well as ICICI Bank too. So if you take a look at some of the big winners and losers, it was Sonata Software, Alchem Labs that did very, very well. On the flip side, you had Astral and Praj on the back of its earnings reaction. Both of them took a deep knock, along with some other stocks like Bata India as well as Piramal Enterprises. So that is what the market texture was, and all eyes will be on how the market continues to perform, given that a big geopolitical factor that we have playing in terms of Trump's and Putin's meeting on Friday. So all eyes are going to be very, very focused on where the Nifty heads next. Welcome to the special coverage of CPI. We have numbers coming in, flashing on the bottom of your screen. July CPI inflation has come in at 1.55%. We were expecting this number to be at 1.76%, and even that number was at an 8-year low. So this has come even below that and looking very healthy. Remember, the RBI's ideal target range for that number is 2%. And we've come at 1.55%, and like I mentioned, the Reuters poll was 1.76%, so looking much better than our estimates as well. That was anyway trending lower. And Anjali, take it away from here.
Yeah, so the number that has come in for the month of July is at 1.55%, and the Reuters poll did suggest a number of 1.76% that would come in for this month, and the script from the last month was at 2.10%, which means this is a further downward trend that we've been seeing for the CPI numbers, right, Snehi?
Absolutely. If you take a look at the urban and rural inflation print that we're seeing at the bottom of the screen, urban inflation has come in at 2.05% versus 2.56% on a month-on-month basis. So quite a cut on that front as well. Vegetable inflation has come in at a negative 20.69% versus a negative 19%. And in fact, this time we were expecting a cool-off in food inflation to drive the overall cut that we've seen in inflation numbers overall, the overall CPI number, and that's exactly what has happened. Let's get some better idea from our guests who are joining us on the show. We have Mr. Subodip Rakshit, Chief Economist at Kotak Institutional Equities, Indranil Pan, the Chief Economist at Yes Bank, along with Ms. Gaura Sengupta, the Chief Economist at IDFC First Bank. Thank you so much for all of you to join us and taking your time out to join us and speak with us today. So, Subodip, let's begin with you. Your first take on the CPI number. We were pegging 1.76. It's coming at 1.55. What do you make of these numbers?
So, we were looking at 1.2%, so slightly above our estimate, and we were arguably lower than most people on the street. I think the bigger point to make here is that inflation remains benign, as it will be over the next few months, at least till the end of this year. And a lot of it is being driven by the food and beverages part, and hence to that extent, the risks also remain on the higher side in the sense that there could be sudden flashes in terms of inflation spiking up. But as it stands now with the monsoon, etc., the today's print of 1.6% or 1.55% certainly kind of reinforces the belief that inflation, at least over the near term, will remain on the lower side.
Right. Coming to you, Anjali, now this is Anjali this side. Can you give us a little more insight into this number being the lowest since June 2017? What does this signify?
Well, if you are really looking at from a monetary policy perspective, I don't think we are expecting any further cuts despite this inflation print coming out at quite a near time low. So now going forward, obviously, as your current numbers undershoot the expectations, there is a chance that since we are calculating inflation on a YOY basis, there's a chance that inflation in the Q3 and Q4 emerges higher than even what the RBI is predicting. So from a reaction function from the RBI's perspective and the monetary policy, I don't think this inflation print does anything much. And we are not expecting any further rate cut from what we have already seen. And we are looking at the terminal rate being at a 5.5%.
No major change on that front. Gaurav, before we come to you, I just want to address a few more numbers that are trickling in. This is, of course, on the food front. We have vegetables inflation, like we mentioned, at negative 20.7% almost. Pulses inflation has also seen a bigger drop at negative 13.76%. Fuel and light inflation at 2.67 versus 2.55, so slight spike here on a month-on-month basis. You have housing inflation that's come in at 3.17 versus 3.24, largely flat, not all that of a change coming in on housing inflation. Clothing and footwear inflation at 2.5 versus 2.55, so no major change on this front as well. Gaurav, hi and welcome to the show. What are you making of the numbers on the food inflation front, and how is that print looking to you, in line with what you were estimating?
Slightly higher, so we were at 1.3%, but I think the internals reflect the consistent story that there is excess capacity in the economy. Yes, the slump in inflation is driven by food, and it's one of the reasons why RBI decided to basically continue to indicate that the further scope for easing is limited, is because a large part of the disinflation is driven by supply side factors such as food inflation turning negative. But I would also like to get your attention to the core print, which has come down further, which is a good sign, and especially if you look at core, which is if you exclude gold, silver, fuel, like petrol and diesel, that's likely to be below 4%. And it has consistently indicated that at least from the demand side, the demand push pressure is not is on the softer side in the economy, with excess capacity being there. So we still see space for further easing. We maintain our expectation for one more rate cut in the October policy. If you look at the forward-looking trajectory, RBI is at a 3.1. We see some downside risk. Our inflation is tracking at 2.7 for the year. Supportive base effects will persist till Q3. From Q4 onwards, yes, there is a pickup in inflation trajectory, but the difference that our inflation trajectory is versus the RBI is that we aren't seeing it exceed 4% on a very elevated manner. For example, RBI has indicated that Q1 FY27 inflation is 4.9%. We are still tracking around 4% for that quarter. So yes, there is a pickup in inflation from Q4 FY26 and Q1 FY27, but it's not really going above the 4% threshold that significantly. So there is space, in our opinion, to ease rates. The core inflation is indicating that there is excess capacity in the economy. We have another indicator which is telling you that the economy is growing below potential, which is the reduction in the current account deficit. We also have very limited support from the fiscal side. So RBI has done the major support to growth by front-loading rate action. And given the fact that we do see inflation remaining around 4-ish in Q1 FY27, we still see that there is some more space to give one final cut of 25 basis points, likely in October, taking the terminal rate to 5.25.
Right. Now coming to you, Subhadeep, you were penciling in an even lower number for the inflation print for this month. Given that, do you expect any change in the stance or even a rate cut that might come from the RBI this time around?
Not really. I mean, if you look at the last policy, the August policy, I think the bar for cutting rates has been raised a lot. If you look at the inflation estimates over the next few quarters, until unless you are significantly undershooting it, or if growth were to show very significant signs of slowdown, I think there is little that will move the RBI from a prolonged pause. I think the more important part is that when the RBI is looking at the policy rate, or at least thinking about the policy rate, they are thinking about the inflation expectations and the forward-looking inflation. And if you start looking at FY27, I think there are significant upside from the 4% mark that we can see through first half of FY27. By our own estimates, it will be somewhere close to 5 to 6%, I mean, within that range. The point essentially is that once you take into account the RBI's estimate of the next few quarters, let's say the second, third, and fourth quarter prints, and then start extrapolating in terms of where the RBI sees the first quarter or the second quarter of FY27 in terms of inflation prints, I think there is very little room that the RBI has left for cutting rates. I completely agree with the points that there are quite a bit of slack or data points that would indicate that there is a slack in the economy. But I think at the same time, from an inflation targeting central bank perspective, the forward-looking or the 1 year ahead or few months ahead, few quarters ahead, inflation prints start becoming important at some point. So I think from an action perspective, we are on a prolonged pause from the RBI. That's what we expect.
Okay, hoping for a prolonged pause and no action in the near future. But just to take that point ahead, Indranil, if you take a look at what the core CPI number has come, it's still much above the headline number. In fact, it's above the headline number by a margin. Does this signify any persistent underlying pressures in the economy despite some of the vegetables, some pulses, some of those prices softening? Do you still believe that there is some persistent pricing pressure?
Well, first of all, I don't understand why people are trying to build out so much of implications out of the core. The reason I say so is the law clearly says that it is the headline that is to be targeted. So there can be arguments on both sides. When food was on the higher side, we were asking the RBI to look through the food inflation. And now when food is down, we are asking the RBI to look at the core. I think so we need to decide that. So that's point number one. Now, point number two is, as we all know, we will have a new inflation base year coming out, and that should be implementable by the next calendar year, or at least by the next financial year. And if I am reducing the food, the weightage of the food, which is clearly indicated by the weighting diagram that comes out from the at this point in time, we should be seeing the relative weight on the core inflation being on the higher side. So supporting Shubdeep's point, we also therefore find no reason for the RBI to cut. And we did hear about the fact that core is relatively soft, true, and that does point to a slack in the economy. But having said that, I think if I really strip out the vegetables from the overall food inflation, the food inflation is actually on the positive side. It's still rising. So it's the pure impact of just one thing, which is the vegetables, which has brought the food inflation to the lower side. So it's a lot of data and it's a lot of perspectives that the RBI needs to understand in this inflation print. Yes, the atmosphere is uncertain, and my particular belief is that unless we actually see growth getting downsized in a very significant way, much lower than the potential 6.5% to 6.75%, we shouldn't see the RBI cutting.
Okay, so that's the view that you share as well. Gaurav, very quickly, due to paucity of time, we just want to take one quick question with you. The cool-off that we've seen on the rural front in terms of rural inflation has been slightly higher than what we've seen on urban. This is supported by the rural demand that we're seeing right now as well. Quick takes on the rural versus urban inflation figure?
It's more, I would say it's more a reflection of the construction of the index. The fact that rural does not capture housing, and housing, which is basically rents, is captured in the urban side. So you have a higher weight for food in rural, so and a lower weight on core. So it ends up showing, for example, right now we have negative food inflation. So rural will show more deceleration in inflation pressures because of the current base, which is based on 2012 consumption patterns. They did not capture housing for rural, which is going to change once we get the new base, which is next year. But very quickly, I would also want to add that if you look at the consumption trends, the urban side remains particularly weak. We've got some benefit from the rural side with good monsoons. Your food crop output is likely to be higher, which again is very good in terms of sustainability of forward trajectory of inflation. But the urban side, if you look at all the various indicators, FMCG sales, electronic payments data is showing weakness. And the fact that the fiscal impact or the fiscal support to growth for now is broadly neutral, we still say the RBI would need to be on the front foot to support growth.
Right. Thanks, Gaurav. So another month of inflation further cooling off. In fact, the lowest that we've seen since June of 2017. In fact, the food inflation number that has come in for July 2025 is also the lowest after January of 2019. Thank you so much, all of you, for joining us here on ET Now and sharing your views.